Home prices. They've fallen again in a major Canadian market as potential home buyers hit pause in the face of higher mortgage rates. This time it's Toronto, where prices and sales volumes in July fell once again from the month before. For more, we're joined by Jason Mercer. He's Chief Market Strategist with the Toronto Regional Real Estate Board. Jason, thanks a lot for joining us. Give us the high-level snapshot of what we saw in July. We saw sales volumes come down. We saw prices tumble yet again.
Yeah, I mean, I think the main story is that, we have seen demand drop off in the face of rapidly rising borrowing costs. A lot of buyers moving to the sidelines to sort of reassess their situation in the marketplace. And what that's done is seen more balance in the marketplace, so more choice for buyers and more negotiating power. So as a result, we're seeing now the average selling price just a little bit above where we were this time last year, and it's certainly trended downwards from the peak that we saw in February.
How far are we from that peak? How far off the February peak are we in the average Toronto home price?
Yeah, I mean, we're a little above $1.3 million in February, and now we're down to 1.075 now, and so that's definitely a trend lower, still above where we were this time last year. And if you look at the breakdown, it's interesting because, we've seen more of a drop off in pricing in the more expensive, detached market segment. But as you move down sort of the price spectrum, we're still seeing, stronger growth with regard to, say, condominium apartments and townhomes. So I think you are already starting to see some buyers who move to the sidelines perhaps sort of reassess what type of home you're purchasing, and sort of seeing a little bit tighter market conditions in those lower price points.
Once again, TRREB, the Toronto Regional Real Estate Board, is urging governments, the federal government in particular, to make some changes to enhance home affordability. Why don't you summarize what TRREB is calling for?
Sure. I mean, we've seen a pretty rapid run up in borrowing costs, and we expect to see further movement on the part of the Bank of Canada. And what we're calling for is a little bit more clarity, both on the mortgage lending front, mortgage insurance front, around if there's going to be any flexibility in the offering around, say, amortization periods and what have you, and also thinking about the OSFI stress test as well, a little bit more clarity and transparency in terms of, if there's going to be any adjustments to that stress test in the face of a higher borrowing cost. It would give people a sense, I think, where different agencies of the government feel the borrowing costs and affordability is going to go, and whether there'll be any adjustments made to those related policies.
Are you calling for a softening of the stress test? The stress tests, in short, require a would-be home buyer to prove that demonstrate that they would be able to handle interest rates that are, 2% higher than what they're applying for, 2.5% higher?
That's correct, and I think it would be interesting to hear OSFI's standpoint on where they feel interest rates are going. I mean, given where posted rates and contract rates are now, do they still feel it's realistic that 200 basis points is a reasonable stress test? And if they say yes, then that suggests they feel the borrowing costs are going to increase further. If they see an adjustment to that stress test moving forward, then that would give people a sense of where they think borrowing costs are going to go, because I think a lot of what's happening in the market today is surrounding uncertainty. You have a lot of home buyers that still want to purchase a home, but they don't sort of fully understand what their options are going to be, especially in the mortgage market, whether it's around product or stress test or amortization period or what have you. It would be good to have a little bit more clarity from the various government agencies on whether there's any policy tweaks in the offing.
And you also are calling for at least an examination of moving to maximum amortization periods of 40 years. That would be substantially all of a person's working life. Tell us why you think that option should be explored.
Well, I mean, we've moved down that road before in different areas of the market cycle or different segments of the market cycle. And I think what we're saying is that, from CMHC's perspective and the federal government's perspective, do they see any flexibility in amortization periods moving forward? I mean, we've been as high as 40 years in the past, offering also 30 and 35-year options as well. And what we're saying is that is there any flexibility as we move forward through this period of higher borrowing costs and hampered affordability?
You also, moving to another tier of government, you're fairly critical of a decision made by Toronto City Council, the municipal level, for increasing fees on development charges. And I'm reading that the average cost of all government charges and fees now stands at $350,000 plus on the average home sale in Toronto?
Yeah, I mean, if you think about the cost of bringing new homes online, and we've talked a lot in the past about the requirement for more supply in the marketplace, and that remains. I mean, right now it would be easy to press the pause button in terms of, from a policymaker's perspective, in terms of bringing on more supply, because the market is a little bit more balanced now. But I mean, we're still looking at record levels of immigration, record population growth in the GTA, and we'll start to see some of these home buyers moving off the sidelines back into the ownership market at some point down the road. But if you look at the cost of bringing new homes online, a lot of that is borne by fees and charges. And so while credit where credit's due, we've seen both at the municipal level and provincial level policy shifts to bring on more supply, and that should continue. We should also look at whether it makes sense to have this level of development charge, which hampers affordability when we're talking about bringing new homes online to begin with.
Jason.